All right, folks, and welcome to our Research Hour session. In today's session, we're going to look at the overall market as our big picture view on the situation, and we're going to do that by reviewing the major indices. I'm also here displaying on my screen the big picture indices that I want to take a look at today, which is going to be the NASDAQ QQQs, the SPYs, the Diamonds, and the Russell 2000, the IWM index. And in addition to that, I want to go over a couple of the stocks that I'm actually looking at, which are part of our alpha stock strategies, companies that meet our criteria in terms of growth, earnings, and have the momentum to the upside, and also have a higher probability of bouncing and moving higher once the sell-off on the NASDAQ or the technology sector ends. So let's first see what's happening with the overall market. So when we look at the QQQs, as you can see here on the chart that I have on my right side of the screen, we're all the way up here coming down, right? This is on a weekly time frame. I usually or personally like to look at the weekly because it gives me a bigger picture where we've been and where we might be heading to. And let's walk you through this. Remember last year, we had this major decline, okay, from February all the way down to March. This was all due to the pandemic, COVID, the complete shutdown of the economy, okay? And then Congress passed their relief package, their stimulus, and the Fed also started to provide liquidity into the economy, into our system, by buying bonds, in expanding their balance sheet, also lowering interest rate. And in their last statement, they said that they were going to continue to support the market or the economy by buying up to $120 billion of bond on a monthly basis. So that is massive liquidity. So then once we got a bottom and we started bouncing from here, you could see that there's little shake-off periods, okay? Every candle that you're seeing right here represents a weekly time frame. And it's just a small shakeout, profit taking by people perhaps that were buying at the bottom. But when you look at the bigger picture, this is an entire move to the upside. Then last year, during the month of September and October, we started to get a sell-off. Again, profit taking. But notice that I also have a moving average line on the weekly time frame for the Qs. This moving average line act as support. This is representing the 50-day moving average line on a weekly basis. And you can see that around October or end of September, we got a bounce. We had another pullback, profit taking, sell-off, and then we made another all-time high, surpassing the previous high up here. So recently, in the last 3 weeks, 1, 2, and 3, you can see that the market has been declining. And the major news or the headline surrounding the decline, which we discussed yesterday, was higher bond yields. The expectation of inflation starting to creep in, which might cause Jerome Powell to ease the liquidity or the support that he has been providing to the market. And potentially he might raise the Fed funds rate, which might increase the cost of borrowing for businesses. It might increase the mortgage rates out there that consumers are going to be paying. It's just the cost of doing business will increase if we get higher interest rates coming from the Fed. And that's what you're seeing right now with the last 3 week sell-off. But what's important to notice is the amount of sell-off that is coming down here. Okay, you can see here the volume, number of shares traded during the week. It's higher than the other previous months, with the exception of the months of the correction or market crashing during the pandemic. This is a red flag, I will say, a heads up that we might have prices heading lower. Now, if we continue to have a decline in the market, just simply by looking at the chart, now we're talking about technical analysis, where can it go? Where can we find perhaps a temporary bottom and perhaps buy some of the good quality stocks that have higher revenue, higher earnings growth, and have really good, strong fundamentals? So when we look at support and resistance, pivot points. I can see one inflection point right here, and I can also see inflection points here and here. So we can draw support. This would be, yep, this would be on the support side. And we also have other inflection points down here. So we could say that this is the first one. And we can say around 272 and 304 or 300. And the market right now is trading at 310. This is on the NASDAQ. So if we get to this point down here to around the 300 areas, is this going to be a temporary bottom, or is this going to be a bottom for a major move to the upside and then we can participate in the next rally? Or is this just going to be a temporary support level for lower prices to come, where the market may hit the 270 range and then resume its longer term uptrend trajectory? So these are the two scenarios that I'm looking at. Scenario number one and scenario number two. And you always have to be prepared for both scenarios. How would I execute this? If scenario number one happens or occurs, where we get a temporary bounce or support at the 300 range for the QQQ, so I'm going to start to look at these stocks that I have listed right here on my list to start nimbling some and then perhaps riding the next wave to the upside. And if it's not successful, if case number one, if not successful, and then we pull much lower, if we get a deeper correction, then I'm going to be stopped out. I'll take my loss and I'll sit back and I'll wait for the market to find its footing so that we can ride the next wave to the upside. And again, I'll be looking at the same stocks. So that is scenario number two. Now, if we look at the daily time frame, how does this look on a daily time frame? Let me just switch my chart here. And here's the daily time frame, right? Notice that the daily time frame, there's a lot more choppiness, a lot more information released from the stock, because each one of these candles represents 1 day of trading activity. And see the last 3 weeks that I show on the weekly time frame. On a daily time frame, you can see there's a lot more choppiness going on over here. And today we're starting to get a light temporary bounce. This is not significant. You will have to wait perhaps till the end of the day to see if more buyers step in to give this a temporary bottom, or maybe it's just creating a temporary bottom for another major move to the downside, and then finding our support points where we've drawn them right here, right around 300s and the 272. So this is a big heads up on the Qs. But also, this is all part of the sector rotation that I spoke about yesterday. There has been capital flowing into the industrial or cyclical sectors like energy, industrial, airlines, and also financials. And they're selling off tech. Here, let me pull this, one of my quotes windows. Here it is. You can see that XLE, XES, actually Go is getting a bounce today, and XLU, which is typically a defensive sector. But these two have been leading the market higher over the last month, okay? And tech has been the one that has been lagging. They've been selling it off. And you can see all the way down here, SMH, these are the semiconductors as well. They're getting hit today. So these are the things that I'm looking at in terms of the bigger picture. Now let's change to the SPY, the S&P 500. Let's first look at the weekly, which is a lot more clear. And you can see that we are still hanging up here at around all-time highs. But here's the heads up. Here's the clues. And notice that I have an alert in the event that the SPYs hit that area. Here's the clues. Look at the volume down here. This is selling. This is selling pressure increasing from institutional investors that perhaps bought down here in March and took profits here, here, and here. So is this going to be a deeper pullback? Is it going to be a temporary pullback like we experienced in September, where it remained above the 50-day moving average line? If we were to look at the daily, is it going to do the same thing that it did here back in October, where it found support and then the market continued to move higher? Time will tell. And these are the things that I'm paying very close attention to give me clues and heads up. Are we going to find a footing and then ride the next wave to the upside. And if we find a bottom, it could be this week, it could be next week, 3 weeks, who knows? But I know my game plan, and that is once we find a bottom on the footing, and I'm going to be paying close attention to the weekly time frame. I'm going to be looking at my alpha stocks, and I'm going to be buying the best out of all these names. And why am I looking at these stocks? Well, because again, they have high revenue growth, high earnings growth. They have a new and exciting product that is disrupting an industry. And when we get into another uptrend in the overall broader market, these stocks will usually tend to lead the market higher. Okay, so this is on the S&P 500 on a weekly basis. Let's look at it on a daily time frame. Look at the daily time frame. It's very, very choppy. And as I mentioned in the previous time frame, or in the previous weekly chart, see the gray line? This is the 50-day. Notice how it's respecting the 50-day and slightly bouncing from it. So are we going to bounce from it again? That could be case number one. Or are we going to roll over and hit our next support points, which would be this inflection area right here? And if this doesn't work, if this bounces from here, or if it doesn't bounce, what would be the next inflection point? I believe it will be down here, down here. See multiple inflection points, okay? So here's where I would draw my next area of support. And if we get a deeper pullback, chances are that it will come down here, and then we'll probably find a bounce and then move to the upside. So I'm looking at case number one on the SPYs, case number two, and case number three. So each time that I am validating my investment thesis and I am committing capital to test my idea, if I'm wrong, I'm willing to accept the risk. I'm not losing no more than 1 or 2% of my portfolio, but I am willing to test my ideas in the event that if we pull higher, these stocks right here that I'm listing will lead the market higher, and my payout would be greater than what I'm risking. So this is how I'm thinking about the current market situation, and first looking at the broader market, okay? Because a lot of these stocks are in the indices, on the Qs, on the SPYs, on the IWM, and if the indices are selling, or if they're coming down, these stocks are also being sold just because of the way the indices are structured. If the bigger, heavily weighted stocks are also coming down, they're going to take down the good names with them as well. And it's our jobs as market participants, as analysts and traders, to recognize the good names that have been punished because of the broader market. And then we can find them and ride the next wave to the upside. Another key indicator that I didn't touch on is this red moving average line. This is the 200-day moving average line, which can also act as support. And that's something that I'll be paying attention to if the market starts to pull back to perhaps this area. I believe that maybe the 200-day moving average line will move higher down here as well and could reinforce the support point. But we'll see. Time will tell. Let's also look at the industrial, the Dow Jones Industrial Average. Here it is, same picture, right? So on the broader indices, you can see that it's pretty much in harmony. They're all hanging up here around all-time highs. They're above the 50-day moving average line. But when you look at volume, look at the sell-off. These are the big guys giving you a heads up or a clue that they're taking profits. Also, it's March, it's tax season. So maybe some of longer-term investors that bought over here in March, they wanted to lock in long-term capital gains, which is holding stocks on a 12-month period. So this might be one of those reasons as well behind the scenes that you're not hearing. And lastly, let's look at the IWM. How are they doing? Wow, look at the IWM, right? Broke out back in, let's see, over here, back in October or November, over here, broke out to all-time highs. And this one really led the market much higher. I mean, you can see the disparity in terms of the return in the third and fourth quarter of last year, much higher than the Qs and the SPYs. So if this one pulls back, it's going to hit a lot of the small cap and mid cap stocks because the Russell 2000 is comprised of mid cap, small cap companies that are also growing rapidly. So I'm paying very close attention to this consolidation area that you're seeing right here. If we break this, chances are that we might pull lower to this other support point right here. And if we get a severe sell-off, then we might also look at this support point over here and maybe meeting the 200 moving average line. So again, this is what I'm anticipating looking ahead a week or 2 or 3 weeks from now and try to make tactical, high probability decisions in the market. Now let's look at individual stocks, especially the ones that I have right here listed on my screen. But before I plot them on the chart, let's look at some of the fundamentals on these stocks. And let me maximize this. So what you're getting to see here is the entire list of stocks that I pay attention to, that I'm following based on growth, revenue, and earnings. You can see here, column N, O, P, and Q, the percentage growth on each one of these names from 2021 all the way to 2025. The stocks that I've highlighted are the stocks that I'm actually thinking and considering taking positions once we are done with this pullback and we're done with this correction. Again, how long is the correction going to be? I'm not sure. I mean, I don't have a crystal ball to predict it, but I'm assessing and interpreting the market and making high probability bets or decisions that would pay me more than what I'm willing to risk, giving the fundamentals of each and every one of these stocks that I'm looking at right here. So this is the list that I'm paying very close attention to. Now you actually have access to this list. If you are part of the stock investing program, let me pull up here our platform. If you go to our education portfolio by simply clicking on this icon right here, okay, if you click on this, let me log in again. Let's click on this icon. So you scroll all the way down. You can see down here, resources, Alpha Stock Lick Excel. We have to actually update this one for February 29th with the new list. So you can actually download this spreadsheet as well. So we'll make sure that you guys have access to this by the end of the day. Okay. So now let's go through each and every one of these stocks that I've highlighted and I've listed right here. So the first one, ticker symbol MP. Look at the revenue growth, 51% for 2021. Let me zoom in. 85% for 2022, 42% for 2023, 11%, and then 2%. So obviously is high growth in the next 3 years, but the growth decelerates after that. And if we look at the chart, how can we interpret the chart? And what does it look like? Okay. So you can see that this stock is just essentially just pulling back with the overall market. But when you look at the bigger picture, it's in an upward trend, right? The trend is intact. And if we look at the weekly, look at the weekly. It looks nice. This is nicely intact, right? Remember, they go up, profit taking comes down, consolidates, then they move up again. And right now, it's essentially just consolidating above its previous high or previous resistance point, which now becomes support. And they actually have earnings coming up. You can see right here, the icon, this would be on the 15th. So March 15th, it's a very important day for this stock. And usually if I am long the stock and I'm doing it with option with 1 or 2%, then I would probably hold to see what the earnings might look like. But based on the growth that I'm seeing on this company and the fundamentals also and just the business model, there's a chance that they might beat expectations. They had a really good fourth quarter. So I'm really looking forward to seeing what this earnings is going to be, and I might probably end up holding this name. But from a bigger picture, the trend is intact. It's in an uptrend. Okay, so maybe if the stock pulls back a little bit more, it will give me an opportunity to re-enter and then ride the next wave to the upside, the way it did right here. Right, pulls back, consolidates, and then moves higher. Pulls back. Might probably get a little consolidation and then ride the next wave to the upside. All right. So I'm basically just following the trend. Let's look at another name here on the list. Mara, which has exposure to cryptocurrency. Look at this on a weekly time frame. here's one of the variables to pay very close attention to, which is volume. Someone bought a lot of shares during the month of end of July, early August, perhaps in anticipation to this major move that you're seeing right here. But it's important to recognize that nothing goes straight up, right? They go up, come down, profit taking, then they go up again, come down, shake off, profit taking, might be headline risk on the overall asset because this has exposure to crypto and Bitcoin and that entire sector of digital currency. And we might ride maybe the next wave to the upside. So we need to see how this correction may impact this stock. If we look at it on a daily time frame, you can see the same pattern, okay? They go up, come down, go up, come down, goes up, comes down, goes up, comes down, goes up. Are we going? And right now, it's not following through the way it did in the previous rising trends, like this one, for example. 1, 2, 3. Okay, these wave structures are very important. It started, but now it's just consolidating, and in part due to the overall market. Another very important piece of information that I'm looking at to tell me or give me a heads up in terms of the health of this overall trend is the volume. Look right here at the bottom. See how the selling is dying, right? It's drying up. This tells me that perhaps there might be buyers still holding their shares. See here on the every time it goes up, volume increases. Goes up, volume increases. Goes up. The volume increased, but not as much as it did in the first two move to the upside. So this is a little bit concerning to me that on the third wave to the upside, it was in lighter volume. So that's a heads up to me. If we quickly take a look at the growth for Mara, let's see here. For 2021, this is expected to have 4,300% in revenue growth, but because there's limited information, limited coverage from analysts, there's no estimates beyond 2021 that at least I was able to find. So this is a heads up to me. I have it here highlighted because it has exposure to cryptocurrency, and that has been a very attractive and hot sector. But if this trend doesn't reverse, if the volume doesn't pick up, if new buyers come in, then I'm probably going to pass the stock, and I'm not even going to consider it. Let's look at another stock here, Peloton. Okay, let's look at let me remove all of these drawings. I was doing some analysis earlier. And first, look at the fundamentals of Peloton, right? Look at the revenue growth. 2021, 4.1 billion. 2022, 5.5 billion. 2023, 7.1, and so on. But when we look at the actual growth rate, 125%, I should say, 36%, 28%, 16%. So over the next 4 years, this company is growing triple-digit and double-digit growth. Not many companies in the overall market are growing this rapidly. So when we look at the chart, all of this is doing right here is a decline, profit taking. Maybe the market did not like the quarter, but look at the massive volume on the last major increase right here, which was actually this one, right? And we had a little bit of consolidation right here, then the pullback, then another increase, then some consolidation. We're getting a decline. Now, is this going to be a temporary decline for bigger prices to come when the market changes direction and starts heading higher? Probably. And this is why I'm paying close attention to this stock now to see whenever we get that bottom and we start to see on a weekly time frame, buyers stepping in like it did here, buyers stepping in like it did here, okay? Along with volume here and here, like this, you better believe I'm going to be backing up the truck and I'm going to ride this one to the upside. So I don't want to be the first one in. I want the market to tell me and reveal its hand. I want to see the other big fund managers come in. I want to see the Vanguards, the BlackRock, the Fidelities taking a position on the stock. And actually, let's take a look. Who owns most of this stock? So let me pull up here, Thomson, okay? And this is one of the databases that I use to get more financial information and access actually to shareholder ownership. So who owns Peloton? Let's see right here. So shares ownership. See if this pops up. Okay, let's scroll down. Look here, all the way at the bottom where it says top 10 investors. Wow, Vanguard. Vanguard bought 4.2 million shares in Q4. They reported this to the SEC December 31st. They bought 4.2 million shares. Okay, where any other, the major mutual funds? Okay, BlackRock, 4.2 as well. Wow, I wonder if they were talking to each other and saying, hey, look, if I buy 4.2, are you going to buy 4.2? Almost identical. I wonder if they're looking at the same analysis or using the same research. Let's see here. Capital World investors, these guys pour in 4.2 million shares. Look at here, Fidelity liquidated. Fidelity took some profits. But you can see that from the top 10 investors, there's more buyers than sellers. So if these guys are committing hundreds, billions of dollars into this name, and they also are seeing the same level of growth that I'm seeing, and of course, they have an amazing product. They're developing a fitness community. It's a really good product and an interesting experience from what I've seen that they've created, that this is just a temporary pullback on the stock with the overall rest of the market, and we might perhaps expect another major shift to the upside whenever the tide changes. Not right now. I'm not in this yet, but I'm paying very close attention to it. And how I'm going to execute it, I'm going to go in with options. 1-2% of my portfolio, and I will probably have 6 to 12 months out of the in terms of time frame, and probably out of the money so that I can get a bigger payout if I'm right on my thesis and in my analysis. Let's take a look at it from a daily time frame. Okay, look at the daily. It's right around support now. If I draw this, actually, let's pull up this. It's almost right around this area, and also right around the 200-day moving average line. So I think the overall market, if it finds a bottom here and new buyers step in, this could potentially be a temporary bounce, and we will probably need to get much higher above this previous high for it to be a high probability that it will continue move higher and break the all-time high of around 168. So this is how I'm interpreting the data, and I'm anticipating the next wave to the upside, but now I'm combining it with the fundamentals, the research, revenue growth, earnings growth, institutional ownership, and also going to the company website, reading their quarterly earnings, looking at their product, and also using social media to gauge what is the consumer sentiment on the stock. Is it positive? Is it negative? And then formulate my own opinion and be able to test my idea on the markets. Okay, so let's look at the next name here. Digital Turbine, AAPS. Let's go to the, wow. I mean, this one has just been a big winner from last year. Look at the volume here. On better than expected earnings in May. You can see why volume is so important. But what was also key from a technical perspective and reading a chart is that it was breaking all-time highs over here. No, was this all-time highs? Let's go back. Yeah, 3 years. Let me back up more. 15 months, around 31 was actually the all-time highs. Okay, but for about a decade, this stock was flat. It didn't do anything. And then it broke around $9 with volume on earnings, and look at the major move to the upside that this stock had experienced. Now, if we look at the fundamentals, why did it increase so much? Well, one, supply and demand. How many shares outstanding did they have? Look at this, 89 million shares outstanding. And when you look at the top 10 investors or institutional holders of the stock, let's see. Who are they and how many shares did they own? While this is loading, let's continue with the chart. Let me see if this is going to refresh, because that's very important information. Let's look at it again from a weekly time frame. Okay. For this one, I'm actually waiting either for one of two things. The first one, can it break this previous pivot point? The second one, can it pull back to this support point and give time for the moving average line or the 50-day moving average line to catch up? And then it forms a stronger support area and increase the probability that the stock will bounce from here and then continue higher. Look at the growth rate of this stock. 117% for 2021, 30% for 2022, 26% for 2023, 43% for 2024, based on Thomson One estimates from the analysts that are covering this name. But I want to still see who are the institutional buyers. Okay, so let's go to ownership. Let's bring this down. And you can see over here in the top 10. So Fidelity, they have 8.8 million shares position. They sold 800,000 in the last quarter. You have Vanguard, increase their position, 1.6 million. You have BlackRock, they increase their position to 600,000. Let's see, they increased it from 600,000 to 5.5 million. Let's see here, what DE Shell, they sold 1.2 million shares. So when you look at this, I think it's almost a net in terms of buyers and sellers. And how many analysts actually cover this stock? Let's take a look at the consensus estimates. 7. You can see down here, total under price target. 7 analysts cover it. The median price target range is around $84 and $85. Okay. So this might be a little bit stretched to the upside, especially when you're looking at from a technical analysis perspective. This thing has just had a monster run. So I'm waiting for this one to pull back. I want to see it come back to at least the 50-day moving average line where there is support here, and let the market settle. Right now, we are still in a sell-off phase. And if the market settles and the end of the correction, once that happens, then it could be the opportunity to ride the next wave to the upside on the stock and even buy it breaking this resistance area or breaking the all-time highs. All right. And let's look at one more, and then we'll probably open it up to question. Let's look at FUV. This is Fund Utility Vehicle Manufacturer. You can see here the major breakout on volume. Okay, and look at the volume and look at the price action. This was November 16th. So the stock, after it broke out on volume, right, goes up, comes down, goes up again. But now this sell-off is quite steep, but it's right back inside the original week from where it broke out from, over here, right? It's right back inside this area. So, and it's also right around the 50-day moving average line. So I'm paying very close attention to this. And also look at the volume. See the volume over the last 3 weeks right here is less than the volume when it was being bought or increased. And definitely this volume right here sticks out like a sore thumb. It's an indication to me that there's still longer term investors in this name. Let's look at the growth to see if it warrants or justifies, higher price increases in the months and weeks to come. 16 million, no, this is the shares. Let's see how many shares. So 34 million shares outstanding, 21.6 million in revenue, 2021, then 72 million the following year. That is tremendous growth. Then 176 million, 2023, then 332 million by 2024. I mean, look at the growth. This is triple digit growth, 3 years in a row, and then 88%. So the fact that this stock is trading within this range, it's probably, it's just being punished severely. I may have to look back at the press release. I may have to do a little bit more due diligence on this one to see why is it being sold off. Is there any new piece of information that I haven't accounted for? So how do I do that? I go to the company website. I look at the press release. I see if there's any material information like a capital raise. They issued more shares via a private placement. Did they report it lower than expected estimates for their upcoming quarter? So these are the little things or the sort of clues that I will have to pick up by doing my own due diligence. But from a technical analysis perspective, this could bounce and it could be a violent move to the upside, provided that nothing has changed fundamentally within this business. It's just being punished severely because of the decline in the overall market. And this might give me an opportunity to actually enter this name and just buy it and ride it throughout the whole year if I believe that the stock has the fundamentals to break this all-time high of $36. And this is one of the things that I'm going to be working with my analysts. Let's see, who are the owners of this institutionally? Okay, Akimoto. And how many analysts cover this name? 6 analysts are covering it. Look at the mean and median price target, well below from where it's at. But some of these analysts are looking at information, probably doing a DCF analysis and giving them a lower valuation, but they're not taking into account technical analysis, chart, volume, which is an indication to the interest in the stock and also riding the momentum. Look here. Who owns this stock? Okay, so I believe that from Meyer, Mark, I believe he's the founder. So he owns 21% of the company, 7.2 million shares. He actually ended up buying more shares, 78,000 shares. Okay. Let's see here. Invesco Capital Management, 2.1 million shares they bought last year, probably in Q4. Vanguard bought 258,000 more shares. They brought up their position to 1 million. Then you have this other fund, okay? They bought 597,000. They increased their position to 618,000. And there's just been light selling from the top 10 buyers over here. So this just gives me an indication that these guys are here maybe for a longer period of time, maybe holding the stock for 12 to 24 months, giving the growth rate that I'm seeing right here. So keep this one on your watch list. And again, I have the list right here, but go through this process yourself. Study the technical analysis module in our stock investing course, which is module number 5. I also gave you an additional technical analysis lecture, which is coming directly from the analyst program. So if I pull up our platform, if we go to the curriculum, okay, technical analysis. Let me actually revert this to stock investing course. Here we are. Books to read. Module number 5. So study module number 5 to help you better understand some of the concepts that I am discussing when looking at charts. And if you look at also module number 3, alpha growth strategies, I give you a very clear breakdown on what to pay attention to, how to combine the fundamentals with the technical so that you can have a holistic view on the business, the price action when analyzing charts, and increase your probability of placing trades that has a higher reward than what you're risking. And that's very, very important for you guys to understand that concept. All right. So with that being said, so I end the session here. I hope this was insightful. I hope you got to learn something. And with that, I'll see you in the next one. Take care.